Hello friends, welcome to my channel. This is Santosh Kumar Ji Savalgi. Today I am going to teach you a basic accounts. First of all, we need to understand what is the rules of debit and credit. I will show you the next slide. There are three steps of rules of debit and credit. One rule for personal account, second rule for real account, third rule for nominal account. Rule for personal account. Personal account means here is a two steps here. Debit the receiver and credit the giver. Means I will give you the one example for that. Debit the receiver means suppose I have purchased some goods from your company. Means I am the receiver. I will receive the good from your company. Means my account is debit. Credit the giver means it is giver who is giving the goods is giving company to me. That means credit the giver. Here example also given here. Cash paid to Mr. Rajkumar means cash paid to Mr. Rajkumar. Here Mr. Rajkumar will be debited. Mr. Rajkumar is the receiver. Suppose we purchase the goods from Mr. Rajkumar. In this case Mr. Rajkumar will be credited since he is the giver of the goods. Next is rule for real account. Debit what comes in, credit what goes out. Means real account means it is actually in the accounting section real account is considered only for assets and liability. Here already given here. Debit what comes in, credit what goes out. Example, in the above example we paid cash to Mr. Rajkumar will be credited because cash goes out. In case of goods purchased from Mr. Rajkumar, the purchase or goods account will be debited since the goods comes in. Goods and cash are real account. Rule for nominal account. Nominal account is considered as expenses and income. Means all of you know debit all the expenses. It is a common man also understand without knowing accounts. Credit all the income. Example, rent paid in cash. Suppose in our company we paid the rent in the mode of cash. Means it is considered as a expenses. Rent is the expenditure, that is why the rent will be debited. In another case, interest received from bank. Commonly if you think interest is a income, suppose we have in our company we might have some current accounts, we will get an interest on that savings, so that is considered as an income. In this case interest will be credited since the interest is income. This presentation is given by Mr. Santosh Kumar. Thank you.